In the studio in Johannesburg is Ettienne Le Roux, who is the chief economist at RMB. Etienne, down at 43. Last time we saw this was 2014. The survey is what, from the 4th of May to the 2nd of June. What has been the driving force to the downside move?
Yes, Lindsay, bad news actually. So 6 index point down to 43. It suggests that a growing majority of our respondents, and bear in mind that it's spread across 5 sectors in the economy, so a growing majority of our respondents are unhappy with prevailing business conditions. In the second quarter in particular, confidence dropped literally 21 index points when it comes to new vehicle dealers and retailers. Confidence levels among many retailers also came down about 8 points. So those are the 2 key sectors or industries that saw quite a significant deterioration in confidence.
Yeah, the new vehicle dealers one is quite important, because if you're feeling good about your business, good about your future prospects, you go out and buy durable goods, and a car is probably the ultimate durable good that you're going to buy. I saw something from the States a couple of days ago. It was a headline, I think it was on CNBC.com actually. It says, why are Americans buying so many cars? Well, because they're getting rid of those old ones and they're replacing them. But in South Africa, I don't know, there's something different. Is this a significant move, or is it a volatile indicator?
It is volatile, but still, Lindsay, to come down 21 points in 1 quarter, that is significant in everyone's book. I think what is interesting here, it is not only new vehicle dealers that's under pressure and seeing volumes under significant pressure, perhaps even more so than in the first quarter. What we're also seeing is that second-hand car dealerships are also experiencing pressure. So it's not only limited to new passenger cars or new commercial vehicles, it is a little bit more broadly based.
Not good. Retailers also, they came down by 8 points to 52, still a pretty high number compared to various other of the sub-indexes. Is there a distinction between retailers and retailers, whether it be apparel or furniture or groceries? Did you notice any trend there?
Yes, absolutely. And it's not a good trend, unfortunately. Confidence is now below 50, so in net negative territory for retailers selling semi-durable goods as well as for retailers selling non-durable goods. So the only segment in the retail space with confidence above 50, in the 60s actually, are retailers selling durable goods. But important here, Lindsay, is that even there, confidence levels have been coming down, and particularly so in the second quarter. So once again, generally speaking, not a very good picture, and it obviously talks to consumers that are under a fair bit of pressure, and the reason for that is we're quite familiar with those.
Manufacturing and building are both more or less unchanged, and the manufacturing side of things, I suppose, is to a certain extent linked to the PMI, which has been orbiting that 50 level, that cut-off 50 level for a while. Any trends there? Any signs of life?
Very little, actually. Confidence is almost rock bottom at 29 index points. Put it differently, 7 out of every 10 manufacturer that we survey is downbeat. So that's certainly not a very positive picture. This is a sector that is battling, it has been battling for quite some time, and it's truly a sector that's getting hit from all over. Domestic demand is relatively weak, and what we saw in the second quarter, and quite concerning, Lindsay, is that export volumes also came down quite dramatically in the second quarter. So at the same time, demand is weak, and production costs are going up. So whether that's raw material costs becoming more expensive because the rand is weak, or whether it's Eskom, it's certainly a sector that is battling. What we're also starting to notice is that demand has been so weak in the second quarter, much weaker than what many manufacturers actually initially anticipated, and as a consequence they now had to cut back production because inventories are going up. So that's truly a reflection, among many others, of a sector that is battling and not going anywhere anytime soon.
This is quite disturbing. I mean, your last couple of sentences really did hit home, and when you get to the bottom line part of your report, which you kindly sent us earlier on today, it says, a lack of demand lies at the heart of the decline in business confidence in the second quarter. Lack of demand. We're not spending, and we're a spending-based economy. It's not great.
Consumers under pressure for many reasons, and if it's not high electricity tariffs, then it's all sorts of other things. the weakness in the demand also comes through, as I suggested earlier, weakness in foreign demand for our products, locally manufactured products. Lindsay, what is concerning over and above everything we've chatted about so far is that we're starting to see a trend here, and this trend in business confidence is one that for the greater part of the last 5 years, business confidence has been actually below 50 or just below 50 in that net negative terrain. It is reflective of an economy that's actually stagnating. Now, the GDP data bores this out, because what we're seeing here is if for the next 2 years we're going to see more of the same, in essence, the economy will have experienced 5 consecutive years of only 2% per annum growth. That is an economy that's stuck in a rut, and it's 2% growth, and it's very weak, and business confidence staying weak and having been so low for quite some time reflects that.
Ettienne, this is sobering stuff, but thanks very much for reporting upon it. This lunchtime, it's Ettienne Le Roux, the Chief Economist at RMB.